I'm Catherine Ross, and I'm live here from the NYC with Jim Cramer. Jim, the excitement is palpable. I wish we could really...
There's nothing.
Well, there was excitement, though, because
now it's funereal.
Well, now it's almost like a funeral. The vibe is that way, but before it was crazy.
Oh, but that was then, and this is now. Now, what has to happen, there have been deals that have been salvaged that I've seen like this, where they let a lot of the flippers out, and then they have some strong hands underneath who then come in and say basically, you know what, you really blew it, you silly loser sellers, and we're going to punish you. And that's kind of the hope. You'll need the S&P to turn around. You'll need some sense that we hold at the 42 level. In other words, we don't take out the level where we opened. See, if you take out the level where we opened, then it's just going to be a really, it's very unfortunate. Very, very unfortunate for everyone.
And I gotta say, this was wild because just 10 minutes ago, that area was flooded because I was standing there. Now it's empty.
Look, this is not what's supposed to happen. And, I've been a big believer that this company would work, but that this was Hell Week. I mean, yesterday on our call, I said, listen, it's Hell Week. It's just a really bad time. Now, again, there are ways. If I were at Morgan Stanley, if I were on the syndicate desk right now, I would be calling a lot of the big buyers, and I would say, listen, if you ever want another good stock allocation again, you're going to have to come in right now after we've taken away all these bad sellers. And we need you to come in and do it because it's going to be a big year. There's many more deals coming, and we need your help in order to keep this an orderly stock. But they may not be able to do it because, I'm glad they finally opened it. That was looking terrible.
Well, it was rough, too. We were all sitting there waiting for it.
Well, I mean, and now you're hearing, of course, well, it's a big... Look, we did 4 pieces this week about how it was too expensive. But I know no one cared.
They even priced down.
Yeah,
they priced down to 40.
We said no one cared that we said it was too expensive. And, I was criticized for saying that Lyft was a good price to open. Well, that's what I was saying. It was going to open at 100. I was glad they didn't open at 100. But I didn't think that Lyft was a buy. I mean, we have long since felt that these deals are not good deals. Pinterest, 30 times earnings. Zoom's way too expensive. And it's just kind of now, it's hindsight's 2020. Now we got people come out and say, look, this was too expensive. But again, I want to come back and say, this is in real time. It's right now, it's in real time. It's 12 o'clock, okay? What's happening is that they are right now at Morgan Stanley going and calling everybody and saying, we got rid of all the weak hands, all right? But that's who sold it from 40, from 45 down to 42, and now we're going to stabilize it with all the firepower we have, and you ought to come in. We're sopping up. This is how it goes, okay? This is a tactical way to do this. We're sopping up all the selling right here. So when we give you the signal, you come in and buy, and you'll get a $44, $45 average, and you'll be the $44, $40, $50 average, and you'll be the winner. But wait until we see the whites of their eyes that all of the selling is done, all the retail investors are washed out, and then we're going to ask you to come in and start your buying. And that is the last thing that can go right. And then it's over. And then you're going to be done with the unicorns for this period, and there's not going to be all these IPOs in the chute, and you're not going to hear it much anymore, and Slack is going to be Slack, and your Palantir, and you're not going to get the WeWork, and so a lot is on the line for the year for the brokers right here, and that is the only strategy left, is to get all those weak hands out and then blitz it up.
Now, Jim,
the only thing.
I want to circle back to Uber in just a minute because we do have Real Money's Kevin Curran here, and he's going to join us because Uber is Real Money's stock of the day. But I do want to talk to you about tariffs, which I think that the Uber, now that the excitement's over, now that there is no excitement, I think that we need to talk about the tariffs because that's the other big news of today. So now that the tariffs are on the table, what should investors do? Should they be more worried than before?
Well, we've been saying it's Hell Week. We raised a huge amount of money. We're not buying anything. We have the most cash. We're not buying anything because we think that better prices could await. The president was very dismissive of the Chinese in his tweets, basically saying how good it is that we don't have a deal. president truly believes, like it or not, that there were people on our air this morning who were saying that we have more to lose. That's actually not true mathematically. I mean, it's empirical that we don't. But there's a lot of. It is a very strange time. You have a lot of people saying a lot of things, and people can kind of say things. A lot of them not true. I mean, the fact is that we have, say, 150 billion that they take from us, and we take 550. So, I mean, mathematically, it's certainly worse for them. Can the world slow because of China? Well, yeah. I mean, a lot of what the Europeans make goes to China. But I just want to point out that it's not the end of the world, because we have a lot of companies that are valued, that are going to do well. But what we felt from Action Alerts was we had to get through this week. We have been saying since the year began that the Uber deal was going to be hard, that there would not be enough cash around, that the mutual funds that are getting in money are index funds, not actively managed funds. So you're not going to have enough money to sop up the Uber deal. Did I think it would be this bad? No.
I don't think anyone expected this.
Possibility, at least I kind of said that, look, it's not going to be a great deal, and please don't be in it, and if you get it, you sell it. But yeah, I mean, this is not, there will be another opportunity to buy stocks. We did not sell all the stocks that we did because we felt that this was going to be a good week. We've been saying this is going to be the worst week of the year for a long time, and here it is. And I'm very proud of the fact that we did that. We get a lot of things wrong, but we get some big things right. And the biggest thing we got right was to sell a monster amount of stock and then have our call yesterday, which said, I do not like this market.
And I'm glad that you mentioned the call, because he talked about the Uber IPO, what you expected from that. You had a whole walk-up.
Yeah.
You talked about trade, tariffs.
They got to come in soon.
And investors who didn't watch that call live yesterday can go to actionalertsplus.com to watch it now, because that's what matters. You needed to know what's going on in this market and how to understand portfolio management when a market's in free fall. Now, Jim, you've said that this is the week from hell, and I'm wondering, what about next week? What do we do then?
Well, look, I've been saying that when we'll get really oversold, maybe begin to get used to the idea that there's still a process perhaps to do some trade, and that it's not just there's never going to be a trade deal. Uber will have come and gone, and maybe we'll say, you know what, that's a like Lyft, when we had a moment of rationality and they stopped pricing the deals too high. We lose the exuberance that came with Uber, and we get a more sober attitude, and we realize that interest rates are low, and stocks are valued well, and we start over. We just start over as if it didn't happen, except for the companies that are directly where numbers have to come down because the Chinese retaliated. Now, see, I think one of the things that we have to recognize that is the reason why we didn't have more people come in and buy Uber wasn't so much what the president did, it's what the Chinese will do. So people didn't want to sit there and say, you know what, I want to own some Uber and not worry about the retaliation that the Chinese will exhibit. That's where we're now waiting. That's the next thing, is what will the Chinese government do? So one of the reasons why we were saying the Hell Week is going to last the whole week is that we need to see what the Chinese do. And that's why we've been saying Tuesday is the day that we probably want to be looking as a better opportunity to put money to work. Tuesday.
Now, Jim, I want to bring in Kevin Curran, who is our Real Money reporter. Thanks for joining us, Kevin. Now, we just talked a lot about Uber and the disappointment that it was. And, when I got here around 9:20, and you can attest to this, there was so much excitement. There was people were everywhere. Everyone was looking forward to this. And then, as you said, the minute that it really priced, which it priced about 30 minutes later than we expected, the excitement just was sad.
I began to hear, I don't know what you're reporting, that there were people getting 100 shares here, 100 shares there. I speak to a lot of floor traders. All their buyers turned seller. It was a real torrent that went from upstream to downstream.
What do you think?
Yeah, essentially that. I mean, I was in the pit there before I got kicked out, and that was exactly what was happening. It was building up to around the $48 range, and then it quickly, momentum to the downside was tremendous.
And remember, the S&P was falling at that time, and we kind of felt that what would happen, there was a belief that perhaps the S&P might stabilize, but we had it was based on nothing. It had to be based on something. See, something had to happen, like yesterday when the president came out and said, "Wait a second, I got a beautiful letter. I got a beautiful letter from Xi." And then when they knock it down, and then what happens is you get this second scenario where, well, maybe it's 45. And people say, hey, you know what? No, it's not irrational. You've got buyers come in, maybe it goes 46. And then it starts breaking syndicate bid, and that's when you see that. Chwam.
Yeah. I mean, I just hope for the day that we're not moving markets based on tweets, but it doesn't seem to be coming anytime soon.
The president,
so, guys.
I was in Dick Costello, who said never thought this would happen. He was talking about how he got a call from the president when Twitter started. But
Jim, I've actually got one question for you, though, that's kind of been burning up in my reporting. And one of the things that's keeping some people around on Uber is that hope of autonomous driving in the future. And I was wondering if you're playing that, they're competing with Waymo from Alphabet. Apple's got a program, Tesla, who knows. If you're playing autonomous driving, is that a rational thesis?
No, what you're really hoping for is that Uber's so well capitalized that it can wipe out everybody and then raise price. And that's not a totally fanciful idea, and it could happen. But, the one thing, think about all the things that you never want to say. You never want to say, you know what, here's the deal. We are going to wipe out everybody, and then we're going to be able to raise price. That is quintessentially what you're not allowed to say. But you can say that there's a ride sharing, and that's the new culture, the economy, and it is. Look, this is a company, Roger McNamee, an old friend, was saying, look, they raised all the money they need. Now they can really stick around. They can outlast everybody. They have the money to outlast. But the problem is that there's other aspects of the market that needed this deal to work. And the other aspects are that there are many more companies that want to come public. And it's going to be very hard for them to come public now.
So I'm wondering, when all is said and done, when we're watching Uber fall this much, is there a time to buy?
By Uber, well, yeah, but the other parts of the market, look, again, it's not over. Again, I'm mindful it's the middle of the day. If Morgan Stanley uses my strategy of letting all the weak hands out and then coming in with a blitz of orders, then I think you're going to say, well, why didn't Jim say buy it right then? This is now, people have to understand, and having done a lot of syndicate work, there are ways, this is not manipulation. You're allowed to do certain things on a day like today if you're a broker that you typically couldn't do. And what they need to do is wait a little bit longer, make sure everybody who was gone, who was worried, is gone, and then boom. So I don't want to say it's over, okay? I don't want to say it's over. It's too early. I will say that is the only part of the playbook that's left. And it must be done in order to make it so that we do not have a really ugly day.
So you're saying wait and see, basically?
Well, I'm saying that this is I'm actually describing the process.
Okay.
You can decide what to do. I said at $50, I wouldn't pay more than that. You should sell it. We're not that far from that. Obviously the zeitgeist has changed. But what one of the things I hate about current media is that someone can immediately say, well, Jim liked it at 50. Look, things occur. And I'm a big boy, and I'm a little sick of it, but I like my wife, I like my kids, I'm fine. I like the dogs. One dog.
One dog,
but the other one just keeps eating everything. So what you have to have is that strategy. Once again, I'm going to mention it. They get rid of all the weak hands. It's 12:15, and then they bring it up. Remember, it doesn't matter where it opens. What matters is where it closes, and that's what's going to happen. And with that, I'm going to have to take off and go out to San Francisco.
All right.
All right.
Thank you guys for joining me.
You.
We'll see you guys next week.